morning, everyone. Or if you're coming in from somewhere close in Africa, then good morning or there or thereabouts. If you're coming in other parts of the world, it might be good afternoon or good evening, just depending where you're coming in from. I know we have got a lot of people from Africa. We've got Zimbabwe, we've got South Africans, we've got Nigeria, Ghana on board that we are aware of, that registered and the countries they're from, and everybody that's attending as we speak, as they keep coming on. So thank you very much. I'm really excited today. We've got a great conversation around UK and investing in property offshore, with specific really great opportunity in Derby, and that's why we've got Craig Warwick here from Joseph Mews. Welcome, Craig.
Thank you, Scott. Welcome to everyone that's joined us.
Great. Yeah, so great to have you here. Thank you very much. And yeah, I look forward to us having a nice discussion about what's going on in Derby and the opportunity. I think we're going to kick straight off into it. We've got quite a few people on, and it's about a minute or two just after 11. So most people will be joining, would have joined by now, with a few late stragglers. So everybody from wherever you're coming in, if you've just joined, welcome. We've got a lot of people coming in from all over Africa, so thank you. And if you've got any questions, just for the record, this in terms of housekeeping, this will be recorded. So if you did miss anything, you will receive a recording of this. If you want to share that with your friends, or if you want to get in contact with me, our contact details are at the end of the webinar as well. And you're welcome to ask any questions. Just put it in the questions and chat box, and we will look to respond as and when they come in, or alternatively at the end we'll just see how it goes from a timing perspective. We are looking to keep this to around half an hour at best. We are obviously conscious of your time, so thank you very much once again. So in terms of as I said, who we are, I'm Scott Irving. I'm from Carrick Property. I'm part of the Carrick Wealth Group, and with me, as I mentioned, I've got Craig Warwick, and he is from Joseph Mews. I just want to quickly just check. There we go. So that's the picture of us over there. Sorry, the slides are going a little bit ahead of themselves. Apologies, a slight technical glitch. Give me a second. I'm just going to go back. My humble apologies. There we go. So as you can see, Craig's the director of Joseph Mews, and I'm the GM of Carrick Property. And you know, just as we always on every single webinar, we always just give you a brief reminder as to, you know, why invest in offshore property, and why is it a good idea. And I think maybe Craig, you and I can have a brief conversation around this. But you know, I was going through some of the client meetings this week with some of our clients, and what was quite evident for me as an example, when we talk about currency exposure as an example, you know, if you compare your local currency to your to the great British pound, as they call it, you know, depending on whether you're in rands or you're in pula, etc., in Botswana, wherever you are, you know, you've got to look at the period of time over a 10-year period, how that currency has performed against the pound, as an example.
Absolutely. Yeah,
and what's quite evident is, even if you take, just when you invest in property and you look at two factors which, you know, in my mind, when you especially if you leverage and you look at the opportunity on the interest rate, so the low cost of finance. But historically, we always think, okay, well, property, especially if you're in your local and you've got a local portfolio, you always think about, okay, well, what's my capital growth and what's my rental income? And those are the two standards that most you know, South Africans or Nigerians, etc., would have if they have a local portfolio. But
yeah,
and even if that didn't earn anything, and it came down to just a flat structure, and you were just getting your money back, so to speak, when you start to take into the low cost of finance and you look at the currency exposure, that's, yeah, I don't know if you want to mention anything there, but that's for me where we can't discount that. Does that make sense?
Absolutely. I think just looking at the South African market, and in a South African context, looking at the rand versus the pound, There is a lot of volatility on our side locally in terms of our currency and the growth and fluctuations. And when you bench that or you compare that against the Great British Pound, as you said, there definitely is a forex hedge benefit, if we can call it that, in the medium to long term. And that will always be there. That's not going away anytime soon. We know what our local currency does against the pound. So it really is, as you said, just over and above the rental yield and the cap appreciation and all of those good things, there definitely is a currency hedge, a positive currency hedge benefit for local investors and probably most of Southern Africa as a whole.
Yeah, and you also mentioned volatility in there, and that's something that we've always got to consider as Africans as well. When we look at the UK as an example, which is where Derby is on this particular opportunity, it's a very stable economic and political jurisdiction. It's got what I call a very sort of solid infrastructure when it comes to appetite for lending in the mortgage space, and property is a solid asset class in terms of it's stable and tangible. And the other thing as well is when you've got a local portfolio and you look at inflation and you look at how you take into account your capital growth and your rental income, and then you look at your expenses, your levies, and all these kind of things, and you're all performing everything on locally, but you haven't got anything offshore and you're not externalizing your local currency. It's important to diversify. Maybe give me an example of one or two of your clients that have got started off with one or two and have got more maybe, and how that's performing.
Absolutely. I think over and above the elements that you spoke about in the local market and the property portfolio space, probably one of the most important aspects when you compare local to offshore like the UK is the actual lending rate, as you mentioned and touched on, anything between 2.5% and 3.5%, 4%. Those lending rates are not something we see in the local market, and that allows clients and landlords and investors to potentially stack up their portfolio. It's very common in the UK to go with an interest-only mortgage. What that means is, as it says, you'd essentially just be paying the interest off, but the investment washes its face and is cash positive from day one. That said, and with the lender's appetite for global markets and global clients, as you touched on, it's very easy for a client to stack up a portfolio and build a portfolio over time very successfully with the likes of Carrick and Joseph Mews as a partner. So the bulk of our clients, I would say, are portfolio clients and are looking to grow the portfolio, not just buy one apartment, for example, or one property. And it's relatively easy to do so given the landscape in the UK, both from a legal perspective, from a lending perspective, and obviously the currency itself, and the capital appreciation on the properties as well.
And I think, I think obviously we always, we're talking money here, we're talking, the safety and security of your money and the stability of it, and your growth and your capital growth. But I think you've also got to go back one step, and that's really, what are the client's objectives and why? I was chatting to a client yesterday. He's got 3 kids. One's in school, 2 are going into varsity, or in varsity. So that, I would say the horse is already bolted because they're already in varsity and he's paying fees. And he mentioned that, as an example, one of them was outside of his local country and going into another country to study. So all of a sudden the costs associated, become in play. So it's not like children are living at home and then going to a local varsity. They're now somewhere else abroad or outside another country, and there's rent due and there's et cetera, et cetera. So in terms of your long-term planning and your, the long-term wealth generation opportunity of earning a hard foreign currency in a rental perspective is key. And I think we must always go back and just, and I'll ask our clients and attendees on the webinar, what are your current objectives and what are you looking to do, and what are you currently positioned and versus where you would be in 10 years time, depending on whether it's for yourself as a retirement component or whether it's for your kids to inherit, as an example. So I think those are very key aspects that we must certainly consider before we even look at why international property. It's also about why and what are your personal objectives from a client perspective and what you're wanting to achieve. And then obviously looking at why international property. So yeah, I think I think it's important to have this conversation, and please get in touch with us, and we can help you, because from Carrick perspective, Carrick has got a large portfolio in terms of its client base, and we've got various arms in the business. We've got Carrick Consult that can help you with estate planning from a tax perspective as well. So it's not just offshore in terms of the different asset classes. There are obviously other avenues that we can help you in. We've got offices in the UK, Mauritius, Zim, and South Africa, and applications throughout Africa at the moment. So please get in touch with us if we can help you, not just in property, but in other areas of wealth, your wealth management as well. So yeah, so let's move on. I think just to give you a quick heads up, we have a committee, an investment committee. We make sure that we do due diligence on all our partners and all of our products. I think that's the key factor, because we maintain our independence whilst we have preferred product providers that have got established track records. And this is why we've got Craig on board here today. But it's important that you acknowledge that we have full independence to make sure that we minimize the risk for our clients. So Craig, do you want to just tell us a little bit about Joseph Mews?
Absolutely. So yeah, Joseph Mews, we as a company, we were founded in 2001 by our chairman, Andy Foote. Around 10 years ago, we joined the Seven Capital Group, one of the largest property developers in the UK, trading as Seven Invest. Our role really is and was the 30% kind of logistics pocket or vertical of the build itself, of the overall development. We intrinsically invested in each development with each build partner, and we essentially handled the sales, the marketing, all of the purchase elements for the client, the life cycle of their journey, from a customer care perspective, right through to completions, and ultimately letting the apartment out for the clients and making sure that the investment case is sound. To date, we've delivered around close to £900 million worth of property to around 2,500 clients. I think important to note on the 2,500 clients, as I said in a previous slide, is the majority of our clients are partnered with us on the UK property journey, and our portfolio clients. So they'll obviously sit with us, we'll engage, as Scott said previously, we'll make sure that we are not just selling a one-size-fits-all property, but rather consulting with the clients, understanding their needs and objective, and making sure that the investment fits perfectly into that framework. And going forward, Joseph Mews as a company, we are partnered and are partnering with a very select, very carefully chosen build partners across the UK, and that would include various areas and regions and cities that have massive demand, and a lot of regeneration taking place. Looking at our performance, sorry, jump back one step.
I think between you and me, we're controlling the slide, so let me control.
There we go. Okay. Yeah, so just looking at our performance as a whole, 6,500 residential units delivered to date over the last 20 years, and close to, as I said, £900 million worth of property, and over 2,500 happy clients, and that is growing day by day, year on year, and we're very proud of the relationships that we hold with those clients. Just looking at our reach, probably the most important point here is the fact that we've got local offices in South Africa. We look after Southern Africa as a whole, Mauritius included in that. And the importance of this, not only looking at our global reach, is the fact that you've got somebody and a team on the ground locally to ensure that there's always communication. You've always got somebody that you can chat to, that can engage with you, and most importantly, guide you alongside Carrick, in terms of the best route to market as far as getting onto that property ladder in the UK. Next slide.
There you go.
Okay, so what makes us unique as a business? We're a full sales and marketing and delivery partner for the builders that we work with. As I said before, we're invested to the tune of 30% of the total cost of delivery in each and every project. So we've got a vested interest. We understand the markets, we understand the requirements in each area as far as the build type, how to position these developments, and what these developments should look like and what they should encompass for that specific tenant market, and we play an active role in that process. And we have exclusive partnerships with all our chosen developers and developments for that matter. And as I said, you know, we've obviously got our local presence in Africa, in South Africa, looking after the market locally.
Greg, I've jumped the slide of the UK market and moved straight onto the growth forecast.
Perfect.
You know, I think we have covered. We did a little bit of this in January when I had a webinar with Anthony and Craig Fair, the RCO, and Anthony, our commercial director, and we just really discussed the UK and the overall markets and the property offering, and it was a great discussion to get just to get an understanding of everywhere and what's going on. And you know, historically you've got the north which has got some good forecast growth in the past and still goes on. You know, when we look at the different areas within the UK, you know, clients would say, well, why should I invest sort of West Midlands, East Midlands, South East, or why should I go north? And typically there's a lot of similarities between the average property price and the forecast, but where we see some significant areas, you know, and I suppose for me you would say, okay, well, looking at the southeast in this example, you're looking at a 19% forecast growth versus 24% elsewhere in the West and East Midlands. In this, what is your take on? And you mentioned that you obviously work strongly with the developers, but this is obviously information that has been sourced from Savills, and it's a forecast for 2025. What's your take on these areas here?
So I think the initial takeaway from this slide and from this information is that, as I mentioned before, and as you touched on now, we work very closely with local council, we work very closely with the build partners, the developers themselves, to make sure that we're going into the right area at the right time with the right product, most importantly. And I think for an investor, that should always be their measure, their kind of view and what they're looking for in the marketplace. Looking at the West Midlands, looking at the East Midlands, the drivers here in terms of this type of growth, which is higher than the majority of the rest of the UK, there are massive regeneration plans in these areas. Birmingham, as an example, £8 billion, Derby, £3.6 billion in the East Midlands. This is a massive amount of money being spent in that market. And that plays across all sectors. So it'll be leisure, it'll be commercial growth and development. And then probably most importantly for this conversation is the residential development feeding into the growth in that area, feeding into the tenant demand. And those are the attributing factors that bring this type of growth, this forecasted price growth, and for an investor, capital appreciation to the forefront.
Craig, the average property prices are between 250 and 270, and then when you look at the southeast, it's, I wouldn't say double, but it jumps up to 460. It's quite a significant difference on the average property price.
Exactly.
So I mean, would you attribute that just to, because I mean, then looking at it, East and West Midlands might have more opportunity and better value as well?
Absolutely. So the short answer to that is there's an investment case to be had across the entire UK. There's a saying that we use, and it really is part of our strategy as a whole with clients, and it's although cliched, it's real. It's not about timing of the market, it's about time in the market. And these figures are representative of that. It's a case of getting into the right market at the right time as early as possible during that development and regeneration and growth phase to ensure that you have an abundance of demand and a shortage of stock. And the East and the West Midlands, that is the case. So for an investor, it's the perfect storm. And that allows you to kind of attract as much of that cap appreciation and rental demand over a period of time. And that really is the crux of it, making sure that you're not going into a saturated market where there's an abundance of stock, but rather an early growth market where money is being spent, but you're getting in as early as possible and spend the time in the market.
And I think this next slide, which is obviously around the property price within the UK over, this period, when you look at it, the average now is around 15 years in terms of doubling your money.
Correct.
And even if you look at this last period from 2015 to 2021, in the last quarter, if you want to call it, of this graph, it's still got a significant growth area at that period. And that's despite of what we've gone through in the last 2 years as well, or more. In fact, I can't remember how many years it's been with reference to COVID and the interruptions thereof and working from home and all these kind of things. But I think the important aspect is that, we've seen some trends come out of that. People are wanting to, if they're doing a 4-day week, working 1 day from home, they want more space, they want an outdoor look, they want to be close to a park, green belts, etc. So I think those are the benefits. And I think that this here, you'll see similar trajectories when you look at your local currency versus your British pound. In South Africa, 12 to 1, 10 years ago, now 20 to 1. So
yes.
As an example, and I've said that numerous times because I want people to realise the implications of that if you haven't got involved. So I think it's important to note these things so that you can get an understanding of what's going on in the UK market from our side. And I think, sorry, I'm jumping the gun here. Before we go into the actual investment case on investing in Derby, we get to actually do something slightly different. We're going to play a little video. This is from Andy Foote, who's actually the managing director of Joseph Mews, and it's just a little message, really, and it pertains to the latest offering. And I think it's important just to hear directly from why he feels it's important. And it's just a short video, and then we'll go into the investment case, and we should finish up in the next sort of 10 minutes.
The Nightingale Quarter is the new destination located right in the middle of Derby city centre. The actual site itself, where the Nightingale Quarter lies, is what we call a unicorn development. It's unique. You'll never find this anywhere else in the UK. It's literally a 5-minute walk into the city centre with all the shops and the bars and the restaurants and the amenities, and then it's just a 5-minute walk to the train station. So it's perfectly located. It's very rare to find such a large site sat right next to the city centre. It's called the Nightingale Quarter because the site used to be home to a Victorian hospital that was designed by Florence Nightingale, and the whole site has been regenerated into 800 homes. There's houses, townhouses and apartments. However, we've kept the 2 pepper pot buildings. They're glorious Victorian buildings, and these are being converted into a restaurant for the community who live there, and also a gym and a workspace. The Pavilion is centrally located in between the pepper pots. It's the best location within the Nightingale Quarter. It's where everybody is going to want to live. There are 70 apartments within the Pavilion, 51 1-beds and 19 2-beds. They're open plan, spacious apartments with a high-end specification, and the developer, Wavensmere, have been so forward-thinking in what they're creating there. A new community with fabulous outside space and walkways and cycle paths and tree-lined avenues, etc. They've already built and delivered 200 houses that have sold for up to 25% more than the list price because of the sheer demand. Derby itself is the most centralised city in the whole of the UK. It's got current links to Birmingham, 40 minutes by train and 90 minutes to London by train. The city centre of Derby is a beautiful place. It's got the kind of curved historic street, like a Regent Street, with all the bars and the restaurants. There's the River Derwent that goes through the middle, and a fabulous cathedral with beautiful public realm space. There's a university just outside the Ring Road with 35,000 students, and just down the road from the Nightingale Quarter is the professional district, the business parks with all of the professional jobs across Bombardier, Rolls-Royce and Toyota, creating a huge demand for new housing, and the people who live at Nightingale will be able to walk to that area to work. Just further out from the city is a fabulous arena next to Pride Park, the home of the Derby Football Club. The tenant demand for this area, there's only 70 apartments. It's the best location within the Nightingale Quarter. We're expecting huge tenant demand for this. Savills are quoting 24% increase in prices over the next 5 years. This is incredible growth that we're seeing in Derby compared to the rest of the UK. And it's all because of an undersupply of housing and the new jobs being created and the new tenant demand. We're so excited to launch the Pavilion. It's in the best location within the Nightingale, which is in the best location within Derby. And it's a great investment opportunity for our clients because the Pavilion really is going to be the best place to live in Derby.
There you go. So great video there, Craig. I don't know if you're back on. You can hear me.
Yeah.
I think Andy might have done our work for us, as we might just be recapping on the next few slides. But I think it's a good video to give an understanding of the investment case in short, and also the history of the town and the beauty of the town, and also the why it's a good opportunity in terms of the professional work side of things, along with the uni, etc. So I think let's go into the next slide and let's have a look at a few of the key facts and key points in terms of what we spoke about. Sorry, my slide's moving a little bit quicker than I would like. I'm just going to go back to the one. Sorry, are you moving on mic, Greg?
No, I'm not moving. You go.
Okay, they're just checking. Okay, there we go. I'm definitely having technical glitches at the moment. Not sure what's wrong, so apologies for that. Let's have a look. Okay, there you go. Over to you, Craig.
Yeah, so just looking at Derby, I mean, you can see in the video with Andy. It's a beautiful town city, landmark architecture sites, and as part of the development, as you mentioned, as you can see to the right there, the pepper pots, these iconic Victorian buildings that are going to form part of the communities and the tourism development from a lifestyle perspective. So as you see in the video, it's going to be a very sought after development. Probably one of the most important takeaways and points on this slide is point 4, that the city's population is currently surpassing over 250,000 people, and there are only 17,000 residential properties available in this market. That is a massive undersupply. And that speaks into the demand in this area, but more so the fact that this is the time to get into this market from an investor and from a company perspective, from our side. And we've identified that, and it definitely will pay dividends in the long run for all parties. Important to note, it's one of the highest yielding, most affordable assets in the country when we start looking at the pricing and obviously the returns connected to that. And it's got excellent connectivity at this stage. But in addition to that, and we'll point to it later in the presentation, the connectivity is going to be further enhanced. It's such a central city across the UK, giving it logistics and goods distribution opportunities for commercial companies. But also from an opportunity perspective, as you see in this slide now, a catchment of over 800,000 and 6 million people live within an hour's travel of the city. So there's a lot of opportunity coming through in terms of the commercial elements in Derby, but there's also a lot of catchment and reach in terms of skills and guys wanting to come into the city. Forecasted growth over the next 5 years of 24% by independent study done through Savills. So there you can see that cap appreciation coming through again. There's been an annual, over the last 1 year, there's been an annual rental increase in rental yields of 8%. And that speaks to that undersupply. It speaks to the demand in this area. For an investor, it can only bode well in the long term. The average graduate salary, and as Andy mentioned, the closest university houses 35,000 students. There's a massive retention rate on the graduates coming out of this university, and the average salary per capita is the highest in the UK for these graduates coming through, around £2,000 more. So you can see that there's an attraction for these grads coming through, and obviously there's a lot of commercial opportunity and options for them.
It's an old city, but lots of youth in it. I mean, you've got 48% that are under 35, and of those, you know, within the graduate aspect, you know, you've got 46% of them that are looking to be employed within the city after university. So I think that's a very strong, what's the word, belief in the city and what it has to offer.
Yeah.
And then, you know, I think the big one is also, which you mentioned earlier, is the 3.5 billion regeneration plan, which is due, I think it's in 2030.
Correct.
And it's not just about the new jobs it creates, but from the property side, you're looking at about 1,900 new homes. You know, so and we're essentially 8 years away from that. And this is a master step in one of the first ones to get in early into it. So I think that for me is one of the key aspects. You know, when you look at the long-term picture of what's around the regeneration plan to be completed by 2030s in terms of the centre's sort of master plan, I think those are key aspects as well. I think my slide is jumping every two. I don't know what's going on. My apologies.
No problem. Yeah.
So we mentioned training.
Yes, so importantly, as we've spoken about, is the connectivity of any city in the UK, especially when you're looking at the commercial value and obviously the commercial demand and the attraction for potential tenants into that area. Looking at the current rail connectivity, London 83 minutes, Manchester 90 minutes, Birmingham 34 minutes. The most important factor here is the fact that it will be a central hub for the HS2, the high-speed rail, connecting the East Midlands further north, but also, you know, to the west and obviously into central London and Heathrow. The high-speed rail, you're looking at a couple of years, and that's going to trim these travel times down dramatically, giving it absolute connectivity into the financial, into the commercial hubs across the UK. And that in itself is going to be a massive driver in terms of cap appreciation on these properties. And just looking at this market, if you track back the last couple of slides, the video that we just watched, this will be the landmark residential estate in Derby. So it's going to be the sought after address. And as I said before, the investment case to be had is now. If you look at the next 8 years in terms of the realised council plan, regeneration plan, all of those good things.
Yeah. And I'm going to go straight into the, you know, what's on offer, the Pavilion. You know, when we look at the slide, we mentioned that, you know, you've got 8% rental growth and the 24% price growth, which we mentioned before. Yeah, I think what's important to note on this particular one, and we can share with it, I know that we released 41 one beds and 19 two beds, and if I recall correctly, our 2 beds are already sold out. So we've only got 1 bed left at the moment. That's for the first phase. Within the first phase, I just think, just for the clarity for our audience, it's essentially a cash buy in the first phase that we're doing here. You have got the ability after 6 months through the likes of ourselves to mortgage after 6 months, and then after you've taken completion or ownership of the property, and that will allow you to either use that towards the equity towards purchasing another one, or essentially getting the cash back. What's great about this is, you know, your entry price is coming in from just under £183,000, and for our clients on this call and investing into this from a cash perspective, we've got a great phase 1 cash offer. Craig, do you want to tell me about that?
Yeah, absolutely. It's quite a unique offering as a whole and product, or kind of package, if I can call it that, for lack of a better term. As you said, Scott, this is for all purposes a cash purchase. As Andy mentioned in the video, the Pavilion block in this development is going to be the block, and that's why there's such massive demand and such quick sales rate. As you can see in the CGR, the back there, you got the pepper pots, which are those iconic buildings forming part of the amenities, and the Pavilion block is sandwiched between the 2 pepper pots. So you can imagine the landscaping, the views, etc., are going to be very sought after. The offering as a whole, as you mentioned, on the 1 bed's price from £182,000, brilliant price point. is a cash completion middle of next year. So looking at the flow of funds, very straightforward, 25% deposit up front. That's it, completing next year, June. It would then be a full cash completion. But then we've put this package together where you get a 50% up to 50%, sometimes slightly more, equity release 6 months post completion. And as you mentioned, Scott, the client can then elect, do they take it as a cash back, or do they use that equity release to then further grow their portfolio, which has been very popular with the clients that have bought so far in Southern Africa. It really is quite a unique opportunity. And linked to that is the obviously we would be happy to furnish these apartments for the clients and get them ready to rent, and then make sure that the first tenant goes in. So there's a lot of security built into the investment. It's a very clear outline as to what you're buying, why you're buying it in this area, and what you get for your money in the long term. But the investment capital, the whole, taking those two stats, 24% price growth, 8% rental growth into account, and the price point itself reasonably easy entry price point. This makes it a very attractive offering in this market.
And I think, you're going to save a couple of £1,000 just on the solicitors' fees and furniture packs alone. And exactly. The fact that you, if I recall correctly, in our previous conversations, it's around a 12-month guaranteed tenant period. So that's also brings a very positive security around that from that perspective as well.
Absolutely.
Yeah, so I think, obviously conscious of everyone's time, we said we would try and finish by sort of half an hour. We've run a few minutes over that. But maybe that's just our enthusiasm and also just listening to Andy's video. But yes, I think looking at some of the questions that did come across, we have answered most of them within the slides. There will be a recording sent out to you. Just from my side, my details are in this next slide over here. So you can get hold of me on scott.irving@carrick-property.com, and my cell number's there as well. You're welcome to get hold of me, and we can set up a meeting to discuss the next steps with myself and Craig and see how we can help you. So just in short, thanks very much for everybody for attending today from wherever you came in from, Africa and beyond. And thank you very much for joining and spending the time with us today. And Craig, thank you for your time. And,
absolutely, thank you, Scott.
Yeah, great. And thanks everybody, and we'll keep it short and sweet, and we'll let you get on with the rest of your day wherever you may be. Thank you.
Thank you. All the best.